So the stock market is on holidays today, and Bitcoin, since my last video, has gone pretty much nowhere. It's grinded up ever so slightly, you can see, but we're still underneath the 50-day TMA. We've printed 2 days up, so if we can get a third day up out of a significant low, which if you haven't checked out Michael Pizzino's video today, go and check that out, as he talks about some key levels and analysis to be watching as well. But if we do get those 3 days up, especially if we get a close above the 50-day TMA in tomorrow's session, the Tuesday bar, which will hopefully have a bit more volatility and volume since the stock market will be open then it would be a sign that we have printed a very significant low, and we should be coming up to at least retest the $79,000 50% level, which I do believe is actually not drawn like that. I can't remember, go watch Michael's video. But the weekly candle has closed with a red down bar. So it's red and it's a down bar, and it's a lower high on the weekly BX trender. And we'll just have to see how this week plays out. But my weekly analysis has not changed. For as long as price is trading underneath the 33 fair value band, it is still a bear market. Even if we manage to push into it like we did in 2022, get all the bulls excited, I do believe we will still see a flush out until we can see a strong break above, consolidation, and then a retest. Because until that happens, it is still a bear market. And if we do get some, whatever geopolitical event, whatever happens, we'll have to see a breakout above $90,000, consolidation above 90,000, and then a retest, potentially a wick down to maybe 85K or something like that, and then a strong close to say that the bear market is over. The monthly time frame now has flipped back to higher low, as we have seen price move away from that obviously $74,000 low. USDT dominance closed last week pretty strong. We did get a up bar, a green bar, but it was only marginally green, and it was higher low on the weekly BX trender. We'll just have to see how this week plays out. Ideally, for the bears or USDT dominance bulls, this week becomes another up bar, or at the minimum a inside bar. The US dollar is obviously selling off with oil coming down amid whatever the heck Trump and Iran are talking about. Obviously, the US dollar is bleeding a bit against the Australian dollar. And Bitcoin on the 4-hour time frame looks a bit more interesting. We've printed a regular bullish divergence, which would have been a nice trade if you were trading purely off this trend line or off of the 33 fair value band. However, if you actually waited for the regular bullish divergence to confirm, you would have entered at just under 77K. You would still be up, but depending on what exchange you're using, etc., you may only just be above break even based on fees. Now, we did see 7 bars up out of a significant low, which is generally a good sign. We've back-tested 2 important trend lines, this yellow trend line obviously being the strongest one, as I drew it off of line closes rather than obviously candle wicks or bars. So, and we obviously have broken back above the highest trend line. So, and we've closed a candle, potentially on track to close a second candle unless something crazy happens in the next 18 minutes. So, potentially, we're setting up either a 1, 2, 3, 4, 5 pattern, which would mark this as a significant low and would line up with our 3 days up, close above the 50 TMA, potentially close above this swing top signal as well. Or if we use a perfect 100% extension of this line right here, if we were to get a ABC correction, we would see price stall at, you guessed it, pretty much bang on $79,000. So obviously Michael's video talking about how important that 79K level is absolutely justified, because if we stall right at $79,000, that would mean this is a 3-wave up, meaning that we would likely see another 5 waves down. Now, depending on how you draw your Elliott wave pattern, whoops, not like that, you can potentially argue that we have seen a 1, 2, 3, potentially a 4 before a wave 5. Now, some people, whoops, are saying that we've already seen 5 waves down by drawing it somewhat like this. And obviously, there's nothing wrong with drawing it like that, but it is not my preferred count, just because I don't think it's the most balanced. This is obviously also not superbly balanced, and if we do get a push to 79.1, it would invalidate this wave count, at least on bars. If we switch to lines, you can see it doesn't make too much of a difference. So if we were to see 5 waves down based on my preferred count, then this wave 4 bounce would ideally fall short at the local 50% level at 78.5. Because as Jason and Michael always say, a bounce does not have to retest the previous lows exactly or 50% level exactly. If it fails at, say, a 236 or 382 level, it just means the market is even weaker and the chance of a bigger sell-off increases. And that's pretty much going to be it for me today, because I don't really know which one of these 1, 2, 3, 4, 5s I really prefer, but I just think this pattern here isn't balanced enough, because that wave 5 is really short in my opinion, and especially seeing how much selling volume we got in that wave 5, into that obviously bit of a mini capitulation, I do think that is more likely to be part of a wave 3 decline, just because wave 3s are typically the longest and strongest wave. So I think the 4-hour chart is most important to be watching right now. Obviously the 1-bar and 2-bar trends are up, and we could see, you know, another 1%-ish move up, just under $1,000. Not much to say on the 15-minute and 1-hour charts other than a lot of indecision, but your daily, weekly and monthly higher term trends are still down for the most part. Obviously the weekly 1-bar being the exception. But if we have a quick look at market data, you can see FOMO finders and panic. Fear and greed hit extreme fear yesterday, popped back into fear today with the bounce. Liquidation max pain has not really updated much. I'm not sure if we'll come up to 83.1. I think the 78.5 and 79K level will decide whether we hit that level. But if we look at the shorter term timeframes, you can just see 78.4 seems to be and about 77.9 seem to be a really solid cluster for liquidations. So with the 4-hour trends up at the moment, and the ABC, potentially this 3-wave corrective rally, not looking very balanced at the moment, I do believe we could see a bit more pain for shorts, with the long-short ratio being a little towards the long side, but not enough for me to say that we'll probably roll over and continue down just yet. Obviously, liquidations, we did see obviously some pretty decent short liquidations from obviously with that strong reversal that we got right through here. So it obviously that much short liquidations, the 300 million-ish mark, has put a temporary lid on the market, as I've been talking about. For longs, you typically want to be seeing $500 million or more for significant lows, but shorts typically 300-ish million for the most part is enough to at least temporarily stall the trend. And obviously that 400 to 500 million often marks much more significant tops. But yeah, that's pretty much it for me today. Thank you all for watching. Please like, comment, and subscribe. And we'll just have to enjoy the sideways action, potentially a little grind higher until the stock market opens. And we'll just have to see what Trump and his buddies over in Israel, Iran, and whatever have to say. Peace out.